Now, part of this Friday rally can be attributed to the fact that today the U.S. officially granted Chinese exporters 2 more weeks to get products into the country before tariffs jump from 10 to 25%. Now the date moves to June 15th. It was supposed to be June, just a few, right? We were June 1st. So here we have the stocks that have Chinese exposure. Lots of green here. But just to illustrate how quickly the tides can turn when it comes to trade deals, let's take you back to last November. Everything seemed to be going swimmingly at the G20 summit in Buenos Aires, Argentina, when the leaders of U.S., Mexico, and Canada signed the new NAFTA, known as the USMCA. Well, today, the USMCA is still in the legislative process, so the old NAFTA still rules, and President Trump is brandishing tariffs on Mexico. Joining us now in a Fox Business exclusive is a member of the original NAFTA negotiating team. He is former Principal Deputy Assistant Secretary of State for European Affairs, Ambassador Charles Ries. To that point, Ambassador, and thank you for joining us, until Congress, as I understand it, signs off on USMCA, the original NAFTA still is the law of the land, correct?
That is absolutely correct. The original NAFTA didn't have an expiration date, so it stays in effect unless one side or another withdraws, which hasn't happened. If we pass the USMCA, put it in effect, it supersedes NAFTA.
And with any trade deal, there are processes that are built in where if there is a complaint or there's some type of tiff, then each or whoever side is having the problem, they have an avenue through which they can find some resolution, correct? So what happens? Can the Mexicans sue using the old NAFTA as the plate underneath them?
Well, first of all, doing what the president is threatening to do next week, or whenever he might do it, it would be contrary to the old NAFTA, or to the MCA for that matter, if the MCA were in effect. We have made a deal with the Canadians and the Mexicans under which we promise to give them duty-free access to our market if they give us duty-free access to their market, and do some other things. And so we violate that. And if we violate that, then they would be well within their rights to raise tariffs on our goods into Mexico.
Well, would there be an arbitration, and who would arbitrate under the old NAFTA?
Yes, there are processes for arbitration. They're designed for individual disputes. The United States restricts Mexican export rights in commodity X or Y or TV sets or something like that. Mm-hmm. There has never been a case where basically an across-the-board tariff is put up against a preferential trade agreement partner. So there's no history to this, and it's not exactly clear how it would go, what would happen.
Typically in the past, when there were complaints, and the big complaint the president has, and he's made very clear that this is his complaint, is that Mexico is not controlling the flow of migrants across that southern border that we have with Mexico. A lot of these migrants are coming in from Guatemala, south of Mexico itself. In the past, we would expect to see sanctions slapped on countries. That's sort of been the tool with which countries are able to at least get some movement. And yet now the president is using tariffs instead of sanctions. You know, he might get some movement. In fact, we just heard yesterday during this hour that the Mexicans had agreed to send some troops down to secure its southern border. Does the end justify the means here?
Well, I'm, of course, a former trade negotiator, and I don't think so. I mean, we have never imposed these non-trade conditions on trade agreements before. And to do so basically undermines U.S. credibility, U.S. leverage in opening markets for U.S. exporters all over the world, because the opponents to such essentially liberalization for U.S. exporters will say, why should we make a deal with these guys? They not only they have trade objectives, but they're going to impose all kinds of other political conditionality once they get us hooked to a trade agreement. So it's bad. There are lots of ways to deal with the migration challenge. One of them, the only sustainable long-term solution is greater growth and development in Central America and Mexico. And that requires help from us in terms of assets and investment and support. And also, interestingly enough, trade access. So we would rather have Mexicans and Central Americans stay home and export to us rather than move.
Ambassador, one last question here. the president has said, if we slap these tariffs on Mexico, watch, and companies will move from Mexico to the United States. And as he puts it, problem solved. Does it work like that? Can it work like that?
Well, it certainly doesn't work. It doesn't work quite. A lot of the production that is made in North America, this cross-border production, these value chain things, are designed to compete with exports from Asia. So at least it's possible if you actually block exports from Mexico to the U.S., the U.S. market, the Walmarts, may replace those goods with goods from Vietnam or Bangladesh or China. And actually, this conflicts, of course, with the China strategy.
Well, Monday, we'll know whether avocados and bananas are going to be more expensive. We'll be watching it. Ambassador, thank you.
Thank you, Liz.
Ambassador Charles Ries.